Yeah, hello guys. It's your boy Asphalt Effects. So I know it's actually been a while. I've actually dropped a trading banger on this my YouTube channel. So basically, all what I actually want to do today is to let you guys know how I plan my trading setup, my trading opportunities, like the potential opportunities that might actually come up. Okay, for this week. Basically we're on Tuesday, but still there's still more opportunities that is going to come up in the financial markets. Okay, so let's get started. As you all know that I'm using TradingView because TradingView is comprises of all financial assets. As you guys know, it has um it has the pairs for futures. It has the pairs for crypto. It has the pairs for stock. As you know, stock it can be either Apple or Dangote stock, as you guys know, or Transcorp. Okay, so basically, let's get started. So I'm going to explain everything to you guys in this video. All right. So let me try to change the landscape. I'm currently using my mobile phone for you guys. So let me change it for okay. This is the landscape now for you guys to see clearly. Okay. So and this is a Bitcoin for crypto traders. So I actually want you guys to know the opportunities that is coming up, and the first thing to do is to what, check your higher time frame. As you guys know me, I'm a day trader, so I swing on my analysis is basically on a swing mode, you get. So I took my trade as a day trader. I execute my trade as a day trader. That's how it is. Let me put it that way. Okay, so now this is a Bitcoin. Okay, so for this Bitcoin now, the first thing to do as a trader, as you guys know, is to what, check the trend of the market. What do I mean as a trend? What I mean is that the market structure, the direction of the market, is the direction of the market that is going to make you the money. You understand? So you need to know the direction where the market is going to. And if you want to know that, it's going to be from the higher time frame. It's either the weekly or the daily. But because of this video, I'm going to be starting from the daily because I don't want us to spend much time on this video. Okay, so now basically, if you check this time frame here, this is the current high here. So if you see this current high, which is the higher high, and you know that if you have an higher high, it is the higher low that give you guys the higher high. Where's the higher low? Literally, this is the higher low. So let's start from there. This is the higher high, this is the higher low here, and this is the higher high here. You can see. So it gives us the new higher low, here. So is this new higher low supposed to create another higher high? But it doesn't. So what it did was just move to this range here. So it's now break below this previous low. It's break below this previous low here. It gave us what? A lower low. So as you all know that if you have a lower low, what produces a lower low? You know, since we have a lower low, so it has changes the direction from what? From the bullish momentum to what? To bearish momentum. I'm actually at the higher time frame, daily time frame, as you guys can see. So now basically it has changes from the higher time frame, from the bullish momentum to what? To bearish momentum, since it has what? Broken the previous low. Do you understand? So the higher low is the most important level in what? In a bullish momentum, while the what? The lower high is the most important level in a bearish momentum. Now it has broken below the higher low, which is, it has turned to what? To a bearish momentum right now. So it's giving us what? A new low here. This is a new low, showing that this new high here that I'm showing you currently created this new low. So what now happened? We're in a bearish trend right now. So it did what? It gave us a new lower high. No, it's not a new high. It just created a structure here. It's come back to this high, to this recent high here. Come back to this recent high. It's still a bearish momentum. It's still a bearish trend. It gives us high here. It's come back here. So it's not come back down. Can you see? So if you can see someone that is actually what, an intermediate trader or a professional trader, you would have seen that what's the pattern. It has given us one pattern here. So the pattern I'm seeing currently is what? Is an head and shoulder pattern. As you can see, this is the left shoulder, this is the head, this is now the current what? Right shoulder. So it's now broke below what? The neckline. Do you understand? It's broke below the neckline. So what am I going to be looking out for? I'm going to be looking out for what? A retest. That is, it must retest this area here. So, it has broken below here. So let me show you guys, for you guys to see clearly. Can you see now? Can you see? So it's break below this area here. So what am I going to be looking for? I'm going to be looking for a retest. I'm going to be looking for a retest here. A retest on this neckline to what? To sell downward, because it's now a bearish. Do you understand? But as a reasonable trader, you can't be selling at what? At the higher time frame. You can't be selling at the higher time frame because the movement, the momentum of the candlestick is large. So you selling from the higher time frame, although you get the direction of the market right, but you selling at the higher time frame is a wrong step to do. Do you understand? Because the momentum of the candlestick is going to make you lose your money, because your money cannot actually contain the body, how the candlestick is. Do you understand that? So now, basically, what you are going to do now is, what we basically need to do is that you've seen that I've actually shown you the market structure of this Bitcoin right now. You've known that it's bearish. So the next thing to do is what? Is to mark out your key levels. It's either your support level or your resistance level. So the first thing to do, you need to jot it down. The first thing to do as a trader is to get your trend of the market, the direction of the market. You need to get it right. After getting that right, so the second thing is to what? Is to mark out your levels. That's your key levels. That's where you're going to what? Be pinpointing on how to, from where to sell, or pinpointing from where to buy. Do you understand? So basically now, you can start from here. As you can see, yeah, this is the previous high. The previous high here. Start from there. Do you get? It was previously a support. The market come down there. Can you see that? If you want to mark out your key level also, what to note is that your key level, there must be at least 3 or 4 rejections there. 3 or 4 at least. This is the first rejection here. The second, the third here, the fourth here. Can you see the fifth, sixth, seventh, eighth, and ninth? Can you see? It's even more than 3. And do you guys understand? It's even more than 3. So this is the ninth touch. That is, whenever the market comes there, whenever the trend of the market comes there, it's going to give out a rejection. Do you understand? So it's going to give out a rejection there. So this is the first rejection. When the market is below of this trend there, of this key level, the market sell. When the market is below, it sell. When the market is above, it did what? It's buy. When the market is above, it's buy. When the market is below, it's sell. Do you understand how to mark out a key level right now? So that key level, whenever the trend of the market come there, is going to what? Give out a reaction. Do you understand? It's going to give out a reaction. Whether it's at the top of the trend, is at the top of the key level, is going to buy. Whether it's at the bottom of the key level, under the key level, is going to do what? Is going to sell. So that's what I'm saying. So that's a second thing to do. So the next thing now to do is what? Because I'm basically explaining the top-down analysis for you guys. Yeah, top-down analysis. So the next thing to do is what? Scale down to your lower time frame. After daily, scale down to your 4-hour time frame. Yeah? Check out your 4-hour time frame. Check out the direction of the 4-hour. So the direction of the daily is what? Is bearish. So the direction of the 4-hour, check it out also. Check it out that, is it in sync with your daily time frame? In sync in the sense that, are they the same? Do you understand? The advantage you actually have is that, the comparative advantage you have is that, if your 4-hour time frame is actually in sync with your daily time, frame. So it shows that you have an advantage to the market. Do you understand? So basically right now, what's the trend of these markets? You can check here. Come down here. Came down here. So now, basically you should have seen that this is a bearish trend. So this 4-hour time frame now is what? Is bearish, as you can see. is clearly bearish. So it shows that our daily is bearish, our 4 hour is bearish. So what are we now looking out for? We are looking out for an opportunity to sell. So Bitcoin, we are looking out for what? An opportunity to do what? To sell our Bitcoin. So we are looking out for an opportunity to sell. So if you want to sell as a trader, you need to be selling at where? At the lower high. Yeah, you need to be selling at the lower high. So let me explain that. As a rational seller, if you have a product to sell, it's not reasonable to be selling at a lower price. Selling your what? Selling your produce, selling your products at a lower price. Because if you do that, you're not gonna make any profits. You understand? You're not making any fucking profits. But you selling at an higher price is when you are what? You tend to what? You tend to make more profit. Do you understand? So same logic applies to what? Applies to the technical aspect of trading. You get? So it shows that if you want to sell here, we need to sell at these key levels here. We need to sell here at these key levels. Projecting that whenever the market comes there, it's going to do what? It's going to react because it's our key levels. It's going to react because the market is going to be underneath and it's going to sell. Do you understand that? So basically, let's check it out. Let's check it out. So as you can see, when the market is below here, it's come down. When the market is above, it went up. When the market is above the key level, it went up. When the market is above, it did what? It went up. Do you understand, guys? When the market is below here, it's come down. When the market is below, it came down. So it shows that that's our key levels. So what we actually need to do is what? We actually need to what? To be patient. To be patient enough for the market to what? To come to that key levels in order for us to do what? In order for us to sell. Alright? So that's the second thing. So the next thing to do is what? In order for you to what? To have a good risk to reward. You know, I'm actually coming down, like I'm breaking everything down. The first thing to do, if you open a chart, if you open a market, is to what? Is to check the direction of the market. Where are you going to check the direction of the market? From the higher time frame. You can start from the daily, right? So having done that, the next thing to do is what? Mark out your levels. Is that your support level or your what? Or your resistance level. After doing that, scale down to your lower time frame, your 4 hour time frame, which is best. Check the direction of the 4 hour. Note it down. Is my 4 hour, is it in sync? Is it the same with my what? With my daily? Luckily for you, let's say your 4 hour also is bearish, as this Bitcoin is also bearish on the 4 hour time frame, which is fine. So it gave us what? The comparative advantage ahead of the market, that okay, we've basically know our direction of the market. We know that okay, we want to sell this Bitcoin now. Do you understand that? So having done that, wait for what? Wait for the trend of the market to reach that your key levels. Now, this is a resistance level that I'm showing you currently. So we sell from the resistance while we buy from the support level. You've known that. So if you don't know that, I've done a market structure video. You can actually watch that. And I've also done the support and resistance level video on my YouTube channel. So you can actually go back to that. You must have seen my past videos. So go watch that also, okay? So basically now, what we are waiting for now is what? It's for the trend of the market to come to this resistance level, as I've indicated there, for us to buy. So if you want to buy, I'm not going to buy from the 4 hour time frame. You understand? So the reason why is that I want to do what? I want my risk to reward to be reasonable enough. If I'm risking 1, I want to be making like 3 or at least 2.5. That's my average RR. You understand? If I'm risking 1, I'm about getting ready to make 2.5 or above from the market. That's a reasonable risk. That's a reasonable investment. Do you understand? So that's why I'll be scaling down to the lower time frame. So I'll be scaling down to like 1 hour or 30 minutes. So let me do that on, I think 1 hour is going to be okay, basically. So I'll be doing that on the 1 hour time frame. Can you see? So it shows that I need to calm down. It can actually take maybe like a week or 2 weeks for the market to come down, for the market to come to that resistance level. I don't care. That's where a consistent profitable trader is different from the profitable trader. Can you see? The two words are different. There's a profitable trader, there's also a consistent profitable trader. So a profitable trader is just a trader that makes money just once, just in one time. Do you understand? But a profitable, consistent trader is actually a trader that is consistent making money from the market. Do you understand? So basically, you need to be one. So if you want to be one, you need to develop the patience of waiting for your setup. So right now, I'm patiently waiting for this trend of the market. I don't care if it takes 3 weeks or even 2 weeks to come to this resistance in order for me to do what? To sell. Do you understand? So I basically need to wait. So if I want to wait, I will now be using the next thing to do is what? I'll be using a short position too. So this is my short position too. So I'll place it here. Let's say I'll place it here. This is my short position too. And place my TP here. So you don't care about your TP. You should be care mostly on what? On your risk. What you are risking. Don't put mind on on your reward. Do you understand? So you need to focus more on what you are risking to the market. Do you understand? So you need to focus more on that because that's the only thing you can control in the market. That's the only thing. You can't control your reward. You can't control the outcome of the market. So the market can actually give you anything. You don't care about that. So since you have actually followed your rules, you've done your due diligence. So what you need to do. The only thing you can control is what you are risking to the market. I can risk $50, I can risk $100. Do you understand? That's the only thing I can control. I can't control the reward. I can't control the outcome of the market. So now, I will place my what? My SL, my stop loss above the previous high. Why am I placing it above the previous high? Everything, there's a reason behind everything. That's why I'm a kind of trader that loves to give you guys the reason behind everything I'm doing. Okay? So right now, the reason why I'm placing my what? The reason why I'm placing my what? My stop loss above this previous high that I'm showing you currently here. The previous high that I'm showing you currently here. The reason why is that there's an high chance that if I take the trade here on this my entry level, there's an high chance that the market can actually come back to what? To liquidate this previous high here. Do you understand? So there's an high chance that the market can actually try to give us a liquidation. Do you get? So we call it liquidity, right? Liquidity swap. Okay. So there's an high chance that the market can actually come there to reject there and now start selling back. So had it been I place my stop loss here at this high, exactly at this high, previous high, if the trend of the market actually come there, it's going to stop me out. But if the market come here, since I've placed my stop loss above the previous high, it's not going to stop me out. That's why you need to give your stop loss. You need to give it a breathing room. Do you understand? Give it a breathing room. There's a probability that the market can actually come here to be roaming around inside your LCL region before going back to your TP region. Do you understand? So that's how it is. So I think I'll be stopping here, and I know you guys have actually you've learned a lot from this video of mine here. I know you've actually learned a lot. So this is basically how I plan my setup, my trade. Do you understand? So this is how I plan my setup. This is how I plan my trade for the potential opportunities that might actually come up. So as you guys know that Bitcoin is really dumping. Yeah, Bitcoin is really dumping. It's not only Bitcoin. Crypto generally they are really dumping. Like seriously, if you check Solana is dumping. If you check Ethereum is dumping. Yeah. Let me show you Ethereum. Ethereum 2 is dumping. Ethereum 2 is dumping basically. ETH. Ethereum 2 is dumping. Basically, check the 4-hour and the daily time frame. Can you see? It's also dumping. So you also be looking for an opportunity to sell. I will just mark. It's very simple. If you know what you are doing in the market, it's very simple. Merely looking at the market, you would have known what to do. So basically, I will just be looking for an opportunity to sell here. I'm serious. I just wait for the market to do what? To come back here and do what? And sell. Perfect. There's nothing hard in the market. The only thing is to have the patience, is to be disciplined. Follow your rules. Follow your trading plan, follow your trading rules. So okay guys, I'll be stopping here, and don't forget guys, stick to your trading plan, stick to everything that actually applies to your trading system. So without further ado, I'll be stopping here guys. All right, take care guys, peace out, love, peace, tweaks guys.